welcome back. You're watching Stock Picks. Today we look into some of the up-and-comers in the athleisure industry with particular focus on Holdings, Amer and Amer Sports. Joining us with that analysis is Khumalo from Vestact. Bright, a pleasure. Good afternoon.
Good afternoon. Good afternoon. Lovely to be on your show, yeah?
Thank you for joining us. Okay, you chose these counters, so this is your theme. There's a theme, but why is there a theme?
No, but you guys told me the theme. I just chose these.
Okay.
I went with the theme.
Okay, got
Yes.
you.
We're looking at basically up-and-comers and maybe companies we should be looking at when we think of apparel, athleisure, sportswear, and, the likes. So, it is, after all, we're 2 days away from Olympics. So these are the brands you're going to be seeing. So it'll be nice to know what you're looking at.
Very interesting. I will tell you that until today, I'd only heard of Deca, and that's because of Uggs, not because of Hoka. So let's start off by speaking about On Holdings. It is On Holdings. It's a Swiss company, and they actually are big on cloud technology in their shoes.
Yes. So basically, the company was founded in 2010 in Zurich. Apparently, the owner famously developed cloud tech technology. I don't know if you can put a shoe up on the screen so that people see. It basically has gaps in it, and it has cushioning that makes it very easy and comfortable when you're running or walking on them. Basically, how he came about this smooth and cushioned landing of the thing. He was cutting out a hose pipe at home and decided, what if I put these at the bottom of my shoe for better comfort and performance? And it turned out it actually did enhance the takeoff of your run. And obviously, every time you land, you don't hurt your foot in the process. And apparently, it's very comfortable. And as a result, independent marathon runners and mid-distance runners adopted the shoe. And, as they say, the rest is history for On. And basically, the whole founding of the business was based on innovative technology, which is very impressive.
So, of course, the company did go on to list here. I think it was in 2021. Let's talk about that listing and how that has performed, from a counter perspective.
Yeah, so basically, they, like you're saying, they listed it in 2021, sort of had a slump during the 2022 year, and obviously 2023 markets weren't doing also well. But they're up 4% since listing. But if you look at their reversal has been quite strong because they had to climb north of 51% to get back to over the listing price, which I like. And mainly the reason for that is when Nike was coming out of COVID, because of the massive online sale they saw during COVID, they thought online was going to be the only game in town, and people wouldn't be going into all the shops, like the what do you call retail stores, sports retailers, the equivalent of a Sportsman's Warehouse here in South Africa, all over the world. But people turned out to actually have gone there, and it has cost Nike quite a lot. You can see it from their share price because they basically got rid of some of those relationships with the front-facing retailers, and companies like On and Hoka took advantage of that gap. And when now Nike wants to go back, to the shelves to say, hey, how about that shelf space that we gave you guys back when we in 2021 and 2022, and we didn't think we were going to need it in the future? They have to pay more for that, and these companies are already settled in at lower prices for the shelf space, which is pretty impressive, and that has helped the likes of Hoka and On massively when it comes to just having the shoe stare at you when you go to these places to buy some shoes. And obviously then you ask the sales assistant, what shoe is this? This is On, it's Swiss made. And when you hear Swiss made, something clicks in your head, ding ding ding, I have to check this out. And if you like them, you might buy more of them as a runner. So that's how they've basically marketed themselves. And obviously recently On has basically had Spider-Man's girlfriend as the face of the brand, which is pretty cool. These are individuals that have lots of following and influence online, and if they choose to go with a brand, a lot of followers are going to be paying attention and start to buy because, I mean, who doesn't want to look like Spider-Man's girlfriend, right?
No, everybody wants to look like Spider-Man's girlfriend, right? I must ask you just also about this one specifically. It looks like just reporting in Swiss francs has had a negative impact on their performance. So they are doing well. The sales are there, the numbers are there, the volumes are there. Currency issues, I'm wondering if that's something to watch out for when it comes to this one specifically.
I don't think it should worry you too much because majority of the sales come from North America and Europe, which are sort of stronger currencies. It would have been a much bigger issue if they operated in countries with more volatile currencies. When you think of volatile currencies, the UK doesn't come to mind, but now it does because of Brexit. But yeah, the UK is not the only game in town. Africa is not the only game in town, or Southeast Asia and South America. So I don't know. I think it's fine that they, report in their home currency. It's okay.
Then let's move on now to Hoka or Deca. This one is French. Talk to us about this one.
So, sorry, Deckers.
Deckers, yes. Yes.
Yeah, so Deckers basically is relatively, in all of these three companies, is the oldest because it was founded in 1973. Basically, with, again, the mindset of having a company that produces outdoor, what do you call this, garments or clothing, apparel, for lack of a better word. So it's a California company. It has a nice portfolio of brands, like you said in the intro, including Uggs, Tiva, Hoka, which is now the fastest growing in the whole portfolio. There's Sanuk in there. There's Kulabara. It's well versed because when you think of athleisure, obviously during COVID you would think of something like Uggs, right?
Mm-hmm.
But now when you think of athleisure, you think more outdoor, going out there because a lot of people are taking walks. More people are trying different running shoes because everyone is just focused on the performance, on how much they can cut down on their pace, basically what you're doing on a per kilometer, the minutes you're doing per kilometer. So when you think of something like the Hoka Clifton 9, which is their more marathon shoe, is known for being a maximalist running shoe, which features thick cushion soles. So they're really thick. Again, the theme of comfort in the shoe comes in. Yeah, I mean, this is all coming from, I would still think, mostly from the Cloud Take design, but Hoka did, make the shoes much chunkier than most companies. So that's also a trend that we're seeing in the running fraternity.
Interesting about this one also is, I think, just the diversity within the Deckers group. Of course, we have the running shoes, we have Uggs, and nobody thinks of Uggs and running. In fact, you think maybe of something a little bit more or relaxed there. They've got other brands there, I think Tiva, Sanuk, as you've mentioned. All of this telling us that this, of maybe the three that we're looking at today, could be the one that has a little bit of this and a little bit of that.
Exactly. If you want something a little bit more diversified in terms of product offering, you can jump into Deckers. But do keep in mind that over time, most of these businesses want to get into different categories. And those categories that they get into could be fast growing, like we're seeing Hoka does for Deckers. So you might say Amer Sports, no, they don't have XYZ, but once they introduce XYZ, it might be the fastest growing and actually take market share from other companies, and that could be the driver for the share price doing well in the future. So don't always just go for one because of the one thing, that quirky thing that you like. You might find that the thing that works for this company is going to work for the others when they start to introduce it. So keep an open mind when you're looking at investing for the long term.
Love that one, Bright. So let's talk about Amer. I saw Wilson in there and I was like, oh, I know what that is. Let's talk about Amer.
So this is a hardcore brand. Like, Salomon is known for off-road running. Like you're saying, there's Wilson in there, for those hard boots of theirs. There's Santu for those who actually like the competitor to Garmin for their watches. So how you track your runs, swims, rides, whatever sport you do. They have that too. They have Atomic, which is also a big brand in sports. But the most, I think, interesting one in all of the rest is Arc'teryx, which is an outdoor brand first. But North Americans love it because it's sort of high end. It competes with the likes of um, I'm trying to think now. Canada Goose, for example, Patagonia, but Patagonia will sort of be mid-range, whereas Arc'teryx is more high-end. You see the likes of Travis Scott and Drake rocking them in all of these events to show you that the price here it doesn't come cheap. And I mean, it's performance wear, so you do get what you pay for when it comes to the price. They're all fancy, duck down, um, or different animal downs. There's many different downs that you can get out there. And most recently, the innovation in that is the NASA down, which is basically manufactured down, which apparently is smaller. So your jacket won't be as puffed up as mine, but in terms of insulation, you still get as warm as the one with a lot of ducks. So it's very impressive. But the interesting bit about this company, it's not headquartered in North America or in Switzerland like the other. It's actually headquartered in Helsinki, which is in Finland. As you know, it's one of the coldest countries in the world. So when they talk about their downs, they mean business.
Also interesting here, I think that as an interesting one with Amer is, of course, like you've mentioned, very interesting strategic partnerships that they've got ahead there. It's almost like they're not scared to enter the pop culture element of it. That's what we did. We don't see that quite with on there, or maybe they sponsor sports players. But this, looking at pop culture
Correct.
a little bit, looking at, being a little bit cool and maybe really hopping onto the point that you've just made that, there's quirky things about each and every one of them, but they may also offer the same things. What makes this one quirky is that luxury Drake, thing about them, I guess.
Yes, but I'm not sure if those are sponsored. I think celebs are more attracted to the brand because of its innovation and the price point. I wouldn't be surprised if you heard Migos talk about these jackets in their next music video. Because that's what it is. That's how you climb the social ladder these days, by having the right brands at the right time while they're still hot. And this one is definitely one of the hottest brands out there. But to basically rewind and make comparisons to Hoka, Salomon also got a massive growth spurt when Hoka got a massive growth spurt because of more people basically now running off-road, not just running on tar, but running, those tough mountainous terrains and hiking on those mountainous terrains, because people are now more aware which brands are for what. And so Salomon in that Amer Sports portfolio has, seen a massive pickup, which is very impressive. I mean, all of these three companies, I can't choose one because all of them, they're quirky. All of them, they got their benefits. So I don't know, maybe just buy all three, diversify on top of your Nike shares while they work on a turnaround strategy.
Yeah.
So that's what I'm doing.
All right, I like that actually. I like that you've mentioned, the traditional athleisure brands there, because I was going to ask you if, you would ditch the old guys who, we know Adidas and Nike and the likes for these new emerging brands. But like you're saying, a mixture, diversity is a little bit better.
Yeah, because I wouldn't want to ditch a Nike because, I mean, if you look at the share price of Adidas 2 years ago when they had that fallout with Yeezy, Kanye West,
Yeah.
it was a big thing. I think they were down about 60 to 70% of their share price. They've made back all of that and then some by releasing new stock or existing stock that they had of Yeezy. and focusing on innovative releases on, their performance wear, especially on their running shoes. I mean, all of these companies are competitive when it comes to those things because they do care about staying first in mind of every person who takes their athletic life seriously. So if you've always been an Adidas person, Adidas has something for you. So you would have been wrong if you sold the shares then and bought Nike, for example, because Nike is going through the same slump. So you would have lost 70% of your cash and of your investment, and you would have lost 30%, 40% now from Nike. So you would have basically jumped from a frying pan to Mordor, which is worse, in my opinion. So I wouldn't, rush into selling what is underperforming in your portfolio currently because there are new hot kids in town. Eventually, they will get their product distribution right, and they will make up those relationships, rebuild them with the retailers, and you'll have more decent innovation from Nike, and you'll have the shoes you like, and the share prices will react accordingly. So, I wouldn't be, in a rush to sell Nikes at the current levels. In fact, I'll be looking into buying some.
Well, very interesting dynamics and interesting stocks today, Bright. Thank you. Always enjoy our chats. So thank you for your time today. That was Vestact's Bright Khumalo.